Well, hello, gang, and welcome back to another edition of the Forex Market Preview. I'm sorry this is a little late. Last week, I've had such a hard time this summer getting steady and back on track with this normal weekend video. Last week, I had to be out of town unexpectedly. I had a death in the family, and so I apologize to you guys who were expecting a video and then it didn't come out. And today, I'm a little tardy getting things out to you as I was distracted by other matters this Sunday. So again, I apologize to you guys I try and be consistent with this stuff because it helps you be consistent with your trading. And when I'm not consistent, I know that throws a wrench into some of you guys who do your analysis and who take a look at what I'm looking at before you kind of make your decisions for the week. So what I thought we would do today is, instead of doing something time sensitive, I would just talk with you a little bit about walking through a kind of a pre-market analysis. So how do I do it on a weekly basis? What am I looking for when I come in here before I do the Forex Market Preview with you guys? And I thought rather than focus just strictly on pattern recognition, because we could do it with patterns would work largely the same way. But many of you guys are new to this, you don't understand patterns, that's still a very confusing thing for you. And although while it's really cool for me to show it to you and you could see me draw the little triangles and stuff, for many of you that is lost because you don't really know how to trade patterns. And so what I thought we would do today is we would just focus a little bit on the structure of it all. And I'm going to show you how I kind of walk through the market. So the market is now closed. The market's not open. Now I have a short position here, Euro USD. It was a long-term position that I shorted here after the spike up and the retracement. So after this false breakout, I ended up shorting here. And now the market is slightly in my favor. So ignore that for right now. But when we look at this, typically go out to a daily chart. Now, if you're doing this on a longer-term time frame, like you're a swing trader and you only look at it on a daily chart, well, then you might want to come out to a weekly chart just to get an even bigger kind of heads up. But typically, the way we teach it here is you look at your higher time frame, which would be your daily chart, and then once you see something or identify a potential trade to set up, then you drop down to your trading time frame, which would be, in this case, a 1-hour chart. And it could be a 4-hour. Don't get wrapped around the specific times. Just understand you're typically dealing with two different time frames, a higher time frame and a trading time frame, or HTF, TTF. But what we want to do, the first thing that I always look for is breaks of structure. So let's come here and let's start drawing this in. And this is why structure is so important. And if you guys don't know how to do this, I have tons of free training on this. I got so much free training, it's scary. Just go to tradeempowered.com and then go to learn how to trade. And there's literally more free information there than you're going to find anywhere else on the web. And I'm talking good stuff that will teach you how to trade. But let's take a look at this. I'm going to get rid of my cursor here. Let's start out just by drawing in a little bit of structure, and we can see, we're just going to start here at the low point. You could start back here if you wanted to. I'm just going to start here for the ease of our discussion today. And we're going to start drawing this in. And as you can see, the market put in an initial high, what we call an initial low and an initial high. Then it put in an outside retracement, and it put in a higher low. Why is it a higher low? Because this low is higher than this low. Then we get a new structure high. The market made a higher high, higher close, so we get a new structure high. This tells us that the market is in some form of trend because we're breaking structure, moving in the direction, outside return, followed by a new structure high. So what do we want to look for? Well, the very first thing that we look for is we look left for structure. So here was the previous high. The market starts to pull back. What do? We look left, structure leaves clues, and we see this previous structure resistance level. Now we know if this market is in trend that what we should see happen is the market should turn around between the lowest low here and this previous resistance level. The market should, with somewhere within this zone, look for a place to rally. And so one of the things you'll see us do frequently, especially if you come into the syndicate, is we will take a look and we'll try and risk reward this thing. So we'll take a look at this and we'll say, okay, market has put in a new structure high. Now we're pulling back. We're back down into previous structure resistance, which should become support. Now let me look at my risk to reward ratio. Where do my stops need to be? Well, let's take my stop here. There's the low. Let's subtract 10 points. That'd make it 64. Or it'd probably be a little more than that because we're on the daily chart. Let's say 39 for our stops here. So our previous low was here at 50.75s. We go 50.39 for stops. And then we have kind of our stop placement. So we know if I sold them right here at this previous resistance level, let me zoom this in a little bit. If I bought them right here at this previous resistance level, right there, boom, this is how much risk I would be taking, right? Now, how much reward do I stand to get out of this? Well, the way we always do it is we look to previous structure. So here's the previous high. That's where the market previously found some resistance. Was it an arbitrary level? Was it a news level? Was there more structure looking left? Doesn't matter for our purposes. All we care about is the market found resistance there. So that's going to be where we take our initial targets off at. So I'm going to draw in, I'm going to grab my little tool here, and I'm going to say, well, there's my risk. I can also grab this tool. A lot of people ask what charting package I use here. This is TradingView. TradingView is a great little charting package for anybody who's doing analysis. And I can go ahead and I can do a little risk-reward analysis here, right? So I'm risking 2.53% to get 2.26%. Well, that's what we call an inverted risk-to-reward ratio. What that means is I'm risking more than I stand to gain. And that's no good because we have a rule that says we have to have at least a 1-to-1 risk-reward profile on any trade that we take. That means we have to be making at least $1 for every dollar we risk. And in this case, that's not happening if we buy right at the previous resistance level. But what else do we know? Well, we also know, well, hey, the market can technically reverse anywhere inside of this little box here, right? Anywhere in this previous structure area, the market could potentially reverse. So what would be wrong, even if I can't get my risk reward to work here, what would be wrong with moving my entry point down a little bit and just saying, you know what, let me just try and adjust this a little bit. And now we'll say, again, let me pull the other tool out here. We're going to look at this and we're going to say, all right, here's now my potential reward, and here's my risk. Now I'm risking roughly 2 to make 2.83. So that gives me a perfect risk reward, doesn't it? That's certainly something we could do. And in this case, you see that this trade actually worked out beautifully. The market came down, boom. We suffered a little bit of pain as the market continued to press through, but because we understood that the market was in trend, as this market came down, it rallied back up, and we would have taken our initial profits off right there. Now, the market didn't go much higher than that. We actually had a little false breakout here where the market broke above the previous high, giving us the indication that we were going to move into trend. But then, if we consolidate here, we see that the market really never broke out again. Just kind of trended here in between. And then broke out to the upside, and then immediately broke out to the downside. So now we sit at a market like this. So when I'm running through my pre-market, I'm not going through all of this analysis, right? I'm not going through every single step of this on every chart. What I'm really looking for is I'm looking right here, all at the extreme right edge of my chart, and I'm saying, what's happened most recently? Well, most recently, and I don't have to draw these lines in anymore, but you may need to if you're a new trader. What I'm looking at is, here's the most recent support level. There was the most recent resistance level. Market has violated structure to the downside. That means I'm looking for a retracement back up into previous structure support, which should become resistance. And as you can see, one of the nice things that TradingView allows me to do is I can just drop in a little line right here, and it's an alert. And that alert will show up here in my alert stuff, and if the market will come back up and touch that line, it will alert me. That way, I don't have to be constantly flipping back to this chart to see, okay, did we rally up yet? Did we rally up? It will tell me. I can forget about it for 2 days. And if the market comes back into that zone, I can go back and look at the previous structure support, which should now become resistance, and I can run my same risk-reward analysis that I did back here. So as I'm cycling through these markets, that's what I'm looking for. So in this case, Aussie dollar, you can see the market's in heavy trend. There's nothing here. I don't even need to worry about it. I just cycle on. Boom. Oh, here's something interesting. Okay, so the market was coming up here. We've been in a nice trend move. Market pulled back, previous structure resistance should become support. So now I'm kind of in a situation where if the market will dump back down for a day, back down in here into previous structure support, maybe I've got a buying opportunity. If we violate the highs and move up into 3400s, well, then I might be waiting for a retracement back down into this previous high. But so this is something that gives me a little ID. So maybe I might drop in a little alert here and just say, yeah, if it comes back down in there, I'll take a look at it again later on this week. And I drop that in there. Now I'm going to move on to the yen. What do we got with the yen? Well, during the yen, we've had these really crazy spikes with the yen, and now the market is trading in between this anchor leg, which means I could have a pattern here setting up, maybe, maybe not, but right now I've got nothing, so I just move on. Euro yen, what do we have here? Look left, structure leaves clues. Previous structure support has been violated in both of these areas. And so now I have an opportunity for either a 2618 trade, which I teach you about at tradeempowered.com, which would look for a 618 retracement back up into here somewhere. Or I can simply wait for a smaller retracement back up into structure here and look to sell. This one will become more difficult because making my risk reward may be difficult down on the hourly time frame. Not impossible, but maybe difficult. And so these are all things that I'm looking at. So I'm like, oh, well, certainly I want to know about that. So I'm going to drop in a little alert there as well. Oops. Drop in my little alert, and now I'll be alerted if that happens. Then I come back down, New Zealand dollar, and we just continue down this line, doing that the same way with every single pair and trying to see, well, is there anything that looks like it might be setting up right as the market opens? Or are there any key levels that I need to be looking at as I go through the week, as I get ready for the week? And this will change as the week goes on. That's one of the reasons that one of the values of the syndicate is you get to kind of see what happens every day. And every day can be wildly different, especially with the swings that we've been having, the ups and downs, the 300-point up days and the 500-point down days in the stock market. That affects the currency markets as well. Sometimes the currency markets will get real erratic if the central bank decides to do something hokey, or as we saw when the Swiss decided to stop supporting their currency. We've seen the same thing out of the yuan, although that's not something that we really trade. So currency markets can be affected by the same things that the stock market's affected by, or by completely different things. And so given on any given Sunday, you could have your entire plan set up to do one thing, and it all gets blown out of the water come Monday morning. But the important thing is that you're identifying those levels. Structure leaves clues. If you're going to be a technical trader, you have to respect structure. You have to understand how it works, understand the psychology behind why it works. And that's, again, stuff that I try and teach you guys over at tradeempowered.com. And again, I'm not trying to sell you on anything. It's all free. There is a ton of free training there. And so if you need a good place to start, if this is the first time that you're watching a video and you're like, man, that guy was talking 90 miles a minute and I only caught about 5% of it, and even that I don't think I understood, go back to Trade Empowered. Sit down, start walking through the stuff. There are two really great trainings you should do in there. The first one is called Into the Gray, and the second one is called the 2618 trade. That's not only going to teach you a lot about structure and psychology and why markets move and those types of things, it'll also teach you a strategy based on structure that you can start using today. That doesn't require any special indicators, no fancy software you have to buy. It's literally just looking at structure, understanding what you're seeing, and then planning a trade around it. So those two trainings are trainings all of you should watch. And so if you haven't done that already, please go back. And then if you want to take the next step, if you want to kind of join me every day, you can do that for like $1 for the first month. I'm so confident that once you get in there, you're going to love what we're doing, that you can join the syndicate. It's normally $50 a month. You can join it for a full month for $1. And I'll put a link right underneath this video that will take you there so that you can watch it so that you can join right from there. Like I said, it's only $1. You've got no excuses. So take the time. Go watch those two trainings, and if you're intrigued, if you're like, man, this is the best training that I've ever gotten, come join me in the syndicate, because I'd love to have you there. We do War Room every morning where I cover this exact same thing just on a day-to-day basis. So anyway, that's all I got for this week, guys. Until next week, good luck, good trading. I'll talk to you soon.